Are you watching super microcomputer stock plummet and wondering if it's time to jump in or run away? Now, before it's too late, you need to hear this. Super microcomputer stock is in the middle of a critical moment, and it could be a game changer for your portfolio. With the AI revolution in full swing and Nvidia making big moves, you might be missing a huge opportunity if you're not paying attention. Today, we're breaking down everything you need to know about Supermicro's stock dip and whether it's worth your investment. If you find value in this video, don't forget to like and subscribe for more updates. Now, let's dive in. Supermicrocomputer, ticker SMCI, a company known for its groundbreaking technology and innovation, recently made headlines due to a stock drop of over 4%. This drop surprised many, especially since the company is deeply involved in the AI revolution, working closely with tech giant Nvidia. Supermicro recently announced an upgrade to its artificial intelligence infrastructure by introducing the Nvidia OVX system. This system enhances generative AI workflows, promising greater scalability for workloads. But despite this massive step forward, the market didn't react as expected. When stocks dip, one useful strategy is to use the moving averages indicator, particularly the 50-day and 200-day moving averages. If Supermicro's stock remains above the 200-day average, this could suggest that the recent dip is part of a longer-term upward trend. However, a cross below the 50-day average may indicate more downside risk. To understand this, it's important to look at the factors weighing down Supermicro's stock. One of the key issues is the legal troubles the company has been facing recently. Legal challenges can cloud investor confidence, and when combined with a volatile stock market, it leads to hesitation. An interesting tool to consider here is the on-balance volume, OBV indicator. OBV helps track whether volume supports price movements. If the stock price is falling but OBV remains strong, it could indicate that investors are accumulating the stock, hinting at a future recovery. This uncertainty begs the question, should investors consider Supermicro stock despite its legal troubles, especially given the ongoing AI revolution? Supermicro is no ordinary company. It's deeply embedded in the AI sector, working with the likes of Nvidia, AMD, and Microsoft. Nvidia, in particular, has been a major player in the AI boom, making Supermicro's partnership with them a point of interest for investors. For traders wondering about entry points, using the Relative Strength Index, RSI, is a smart way to identify overbought or oversold conditions. If RSI drops below 30, it could signal that Supermicro's stock is oversold, making it a potential buying opportunity. If it rises above 70, it might be overbought, suggesting caution. But the elephant in the room remains. Why hasn't this impressive partnership moved the stock upward? One reason could be market sentiment. Legal issues have a way of overshadowing positive developments, and Supermicro's situation is no exception. The company is currently dealing with scrutiny from Hindenburg Research, which has raised concerns over Supermicro's legal battles. At times like this, the moving average convergence divergence, or MACD indicator, can be helpful to assess momentum shifts. If the MACD line crosses above the signal line, it could signal a bullish reversal, while a downward cross might indicate further downside. Historically, stocks that face short-term challenges but are fundamentally strong often present the best opportunities for long-term gains. Supermicro's partnership with Nvidia is expected to bring future growth. The AI revolution is just beginning, and companies like Supermicro, with their close ties to Nvidia, are well-positioned to benefit from it. To give more perspective, let's look at some numbers. Nvidia has seen a growth of over 200% in its stock price since the AI boom took off, highlighting the massive potential in this sector. It's also useful to evaluate Supermicro's stock with key fundamental metrics, such as the price-to-earnings, PE ratio, and earnings growth. Strong revenue growth and a reasonable PE ratio can be signs of solid long-term potential, even in the face of short-term volatility. With Supermicro closely tied to Nvidia's AI ambitions, any major success by Nvidia will likely have positive effects on Supermicro. In fact, demand for AI servers, data storage solutions, and high-performance computing systems is expected to grow by 30% annually over the next 5 years, according to industry analysts. Despite the recent stock dip, Supermicro has had an incredible year overall, with its stock up 135% in 2024. This surge has been driven by the explosive growth of the AI sector, which has captured the attention of investors worldwide. However, when volatility strikes, checking Bollinger Bands can be a great way to gauge if the stock is overextended. If the price touches the lower band, it could indicate oversold conditions, while hitting the upper band may suggest overbought territory. However, both Nvidia and Supermicro have seen minor sell-offs in recent weeks. These sell-offs have largely been driven by fears that other tech giants may enter the AI hardware market, increasing competition. But before we proceed, here's a question for you. Does this dip in stock price signal a fundamental problem, or is it a temporary setback? Comment your thoughts below, and let's see what everyone's thinking. Many market analysts believe it's the latter. The volatility we've seen recently has been tied to broader concerns, such as fears of an economic recession, rather than any significant issue within the AI sector itself. If anything, the sell-off could offer a unique opportunity for investors to buy into Supermicro while the stock is undervalued. It's important to remember that AI stocks are notoriously volatile. While there's no doubt that companies like Supermicro and Nvidia are leading the charge in AI development, identifying key support and resistance levels can help you decide on good entry and exit points. Buying when Supermicro's stock is near a support level could provide a strong risk-reward opportunity, while hitting resistance may signal a point to take profits or wait for a pullback. To add some context, Nvidia has recently delayed the release of its latest AI chip by 3 months. This delay has had ripple effects throughout the industry, impacting companies like Meta Platforms and Microsoft, which rely on Nvidia's hardware for their AI operations. This delay, along with the broader market concerns over economic slowdowns, has created a perfect storm of uncertainty for AI stocks. But again, this storm is likely to pass. For Supermicro, the long-term outlook remains bright. The company is positioned at the forefront of AI innovation, and its relationship with Nvidia is crucial. As more companies adopt AI technologies, the demand for infrastructure like Supermicro's Nvidia OVX system will only grow. And with Nvidia continuing to lead the AI revolution, companies that are closely tied to Nvidia's success, like Supermicro, stand to benefit greatly. Looking at the bigger picture, the AI revolution is expected to drive over $1 trillion in capital investments over the next 3 years. As the demand for AI-powered solutions increases across industries, companies like Supermicro will play a critical role in providing the infrastructure necessary to support this growth. While short-term volatility may cause stock prices to fluctuate, the long-term potential is undeniable. Let's look at the table. Despite Supermicro's recent 4% dip, the stock has had an impressive 135% growth this year, driven by its close partnership with Nvidia. Nvidia itself has seen over 200% growth thanks to the AI boom. Supermicro's role as a key player in AI infrastructure, with its Nvidia OVX system and other advanced technologies, positions the company for long-term success. While legal challenges and market volatility have created some uncertainty, the strong demand for AI solutions and Supermicro's strategic collaborations with Nvidia and other tech giants suggest that this dip could be a buying opportunity for investors looking toward the future. So, is now the time to buy Supermicro stock? For investors with a long-term outlook, the answer could very well be yes. Despite the legal challenges and short-term stock price dips, Supermicro is in a prime position to capitalize on the AI boom. The company's partnership with Nvidia, along with its impressive lineup of AI-optimized products, makes it a strong contender for future growth. Investors who are willing to ride out the volatility may find themselves rewarded in the long run. As we wrap up, remember that the stock market is never without risks. Supermicro's stock, like any other, carries potential downsides. Legal troubles, increased competition, and market corrections can all impact short-term performance. But for those looking at the long-term potential, this AI-driven company is definitely one to keep on your radar. Now, are you ready to ride the AI wave? What are your thoughts on Supermicro Computer's recent developments? Share your views with us in the comments below, and let's keep the conversation going. If you've made it this far, thank you for watching. Be sure to like this video and subscribe to Simple Investing Secrets for more insights into the stock market and investment strategies. And remember, this video is for informational purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. See you in the next video, and until then, happy investing.